Greetings, my YouTube family. I'm going to do a continuation of how to buy the exchange traded fund for uh, SOXX, which focuses on the semiconductor sector in the US. But essentially, an exchange traded funds, for those who are new, investors pull money together and it's managed by a fund manager for a fee. And then this fund manager then buys certain stocks or securities on behalf of those investors. Now, I'm going to walk you how to actually buy the shares for the SOXX ETF using my broker. But of course, I'm going to disclaimer that this is not investment advice, it's just educational content. So make sure you consult your investment advisor. Now, for those who are new, my name is Isaac Jonas. I started Streetwise Economics to share content on educational material on investing in the US and Canadian stock exchanges. But I'm an economist by training, actually, and I like investing in the US and Canadian stock exchanges. So I'm a retail investor. I started in 2020, and I also like writing books. I wrote my book, which is coming very soon, about investing in the stock market and or pretty much personal finance and investing. Now, to the business of the day, this is how I buy the shares for the SOXX ETF. I essentially go and search for the ticker name SOXX, and today it's Friday, and when I checked out, it was actually 3% up. It's very volatile, it goes up and down, but it has very good volumes. You can see here on average volume is about 900,000 today, average volume today, but usually it's about 1 million. So I click the ticker name, and then my broker, which I use, Questrade. I'm not promoting them per se, but this is their interface. So when I click buy, it gives me the option of how many shares I want to buy, at what price. Then I just, in this case, use the limit, right? If you choose market price, it's like you're buying now, right, at the available price in the market, right? So in this case, I just put this price and then I click buy, and then it will give me this option where if I'm happy with everything here in this account, you see that the share here, in this case, when I adjusted the price, it was now 593, because it's very volatile, it goes up and down, right? So if you don't want to buy on a market price, you can adjust. So I then check out, everything is fine, it's in the right account, and then I have enough money here, and then the fees, then I click send. So now, as with everything, there are merits and demerits for investing in this ETF SOXX. But one of them is that it has broader exposure and diversification within the semiconductor sector, not across the whole economy, US economy. So it's very important to understand that. So if in my case I want exposure in the semiconductor sector, I would consider this ETF, because it has they buy shares in the about 30 companies that are listed at the Nasdaq that are in the semiconductor sector. But also it is convenient because the fund manager from BlackRock or iShare in this case, they then buy and trade if they need to trade in some cases, right, on your behalf. So it's unlike you doing that on your own. Sometimes you need to understand this stuff, right? Then if you just buying and holding for a long term, it may not necessarily trigger tax liabilities, right? Because if you buy for 10 years or so, then for those 10 years you won't be paying capital gains if it goes up for that particular year, right? Unlike if you are buying, let's say, those 30 companies, if you are buying one company, or maybe 100 shares for Nvidia, or let's say the other company that is listed in that list of categories, then it means you're paying about, let's say, $4.95 for the plan that I have. So if you add it up and multiply by 30, or how many times that you do, it's much more expensive, right? And this can reduce your overall return compared to that one ETF that has all these 30 stocks in one stock, in this case when I recorded this. Now you can also appreciate that tax efficiency as well, because if you buy for a long term, then that's good, because even if it appreciates, you all can pay tax depending on what your circumstances are if you then sell, right? And then also it's very highly liquid, over 1 million daily volumes. So what it means, you can easily go in and go out, so which is good, right? And it's managed by BlackRock, which is a very well-known funds managers. But like I like to say, investing comes with risks, right? So I'm going to share those with you as well. Now, in terms of the risks, you can see that there's market risk, inflation risk, credit risk, liquidity risk. So what this means essentially is, let's say market risk, stocks can go up and down. It's very volatile. I remember in 2023, this was down. I had a position which I liquidated because of other reasons. But you notice that at that time it was going up and down, and it's very volatile. It goes up and down very sometimes even ferociously. So if you can't stand that, then it might not be for you. So in my case, I like to buy and hold for a long term, so I don't look at my brokerage account every day, right? Unless I have to occasionally. Then inflation risk, inflation, this is when prices increase. So if it does, in this case, it has given a return of 11% since it was started in 2001. So what it means is it's above inflation, because on average it makes about 11%, and inflation in the US and Canada usually it's an average of about 2%. In November 2023 it was about 3.1%. So if you net that return minus the tax and other fees and the inflation, you can still have some good return, actually good real return in this case, right? When you remove all those other variables like inflation and taxes. Now, liquidity risk, this is highly liquid because in this case, but sometimes it might drop. Let's say, who knows? So it's very, very important. But generally, I find it to be highly liquid with an average volume of per day of 1 million, which is great, right? But it's important to also consider the objectives that you have as an investor to say, is it a long-term investment, right? If you have it, so then if it fluctuates in the short term or long term, it doesn't really matter, because if it goes down, then as an investor with a long-term outlook, it's a good opportunity to actually buy more if you understand where you are investing your money. And again, this is not investment advice. This is just for educational purposes, for entertainment purposes. So thank you, and have a great day. And if you find this content helpful, please consider subscribing so that you don't miss content like this in the future. Thank you so much for your support.